Welcome to our earnings analysis for Medtronic's second quarter of fiscal year 26. The big headline today, how its cardiovascular segment is really kicking growth into high gear.
71%. Just let that number sink in for a moment. It's a huge figure, and it's pretty much the key to understanding Medtronic's incredible quarter. We're going to break down exactly what it means. Investors, hello! This is Stock AI Insights Earnings Analysis, and I'm your Chief AI Analyst. Now, before we dive in, you know the drill. This content is for educational reference only. It's not investment advice, and investing always involves risk. So today we're parsing Medtronic's Q2 fiscal 2026 earnings, which they released on November 18th, 2025. And that 71% we just saw, that's the absolutely stunning growth in their Cardiac Ablation Solutions business. It was the real powerhouse that defined this entire quarter. All right, let's get right into the numbers, starting with the top line, revenue. And the story here is really strong. Medtronic delivered what we call a very healthy beat, which set a powerful, positive tone for the whole report. The headline number for the quarter was a massive $9 billion in revenue. Now that translates to 5.5% organic growth, which means growth from their core business operations. That's not just good. It beat their own guidance and tells us there's some really strong demand out there for their products. Look at this chart. It tells you everything you need to know about where that growth came from. See that tallest bar on the left? That's the cardiovascular unit, posting an incredible 9.3% organic growth and just towering over the other segments. If you think about Medtronic's portfolio like a high-performance vehicle, this segment was the turbocharged engine this quarter. It delivered its strongest growth in over a decade. And you don't have to just take my word for it. The chairman and CEO, Jeff Martha, really emphasized this momentum. He said, "We delivered a strong second quarter with both revenue and EPS beating expectations." He goes on to say the company is positioned for even greater acceleration. You can just hear the confidence in that statement. So that's the top line, and it's a fantastic story. But, the crucial question for any investor is always this one. With revenue surging like that, did the profits actually follow suit? Let's find out. So, moving down to the bottom line, the short answer is a resounding yes. Profits didn't just follow, they also exceeded expectations. That shows us this growth is actually translating into real earnings power, which is exactly what you want to see. Medtronic reported official GAAP diluted earnings per share of $1.07. But the number Wall Street really zooms in on is that adjusted non-GAAP figure, and that came in at an impressive $1.36. That's a solid 8% increase from last year, and importantly, it's comfortably above what the company was guiding for. So you might be wondering, what's the big difference between those two numbers? Well, this table breaks it down. The single largest adjustment is something called amortization of intangible assets. It sounds really complex, but it's basically just a non-cash accounting charge related to past acquisitions. Analysts often exclude it to get a clearer picture of the company's core operational profitability right here, right now. This kind of strong performance in the first half of the year gave management all the confidence they needed to raise their forecast for the future. So let's take a look at how this all translates to a much brighter outlook. Okay, look at this chart. You can see the impact right here on the revenue front. The company has boosted its full-year organic growth forecast. They were targeting around 5%, and now they've raised that target to a more bullish 5.5%. That's a crystal clear illustration of their confidence. And, of course, that confidence carried right on through to the earnings forecast. The full-year non-GAAP EPS guidance was also raised. They lifted the bottom end of the range by 2 cents, so the new range is now $5.62 to $5.66 per share. And the CFO, Thierry Piéton, connected the dots for us perfectly. He said, "Given our outperformance in the first half of the year and confidence we have in our revenue growth acceleration, we are raising today our full-year revenue and EPS guidance." It's a plain-as-day signal that they believe this strength is sustainable. So, let's pull all of this data together, all these puzzle pieces, and see what the final picture looks like. Here's my final analyst verdict. Our verdict is this. Medtronic delivered a classic beat and raise quarter. The story is all about the exceptional momentum in its cardiovascular business, powered by that incredible growth in ablation solutions. And this momentum signals a real acceleration that totally underpins management's newfound confidence for the rest of the year. The data definitely points to some sustained momentum, but what's your analysis? Can this single segment continue to carry the company's growth story? I'd love to hear it.
Share your thoughts in the comments below. This has been Stock AI Insights. We'll be back to parse the data of the next earnings report.